I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the past week in the financial markets and a look forward at what might happen in coming weeks. And hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market hit the skids a few times this week after an early rally turned into waves of selling and the appearance of something that has seemed to have become extinct: last hour sellers. Monday started out with the Turkish lira collapsing, and that brought the bond market rallying, and that really set the trend for the market all week long as interest rates tended to be soft. And that in that case, that did help the market at times. But Monday saw pretty much like we were seeing all week long as the stock market tried to rally and then sellers did come in, especially in that last hour or two. Tuesday, it was the day where Yellen and Powell got together for their joint testimony in Congress. And that was a typical dovishness as we continue to see from them, as they said the rise in inflation is likely temporary this year. And they just absolutely would not say anything that could shake up the stock market. It's really a sad situation that it's a constant positive rhetoric that comes out of them, which is simply denial of a lot of truths that are out there. So that early rally faded, and we saw the S&P 500 move down 49 points from its peak, and again, a pretty weak close. And the Russell got absolutely slammed. We'll have more to say about the Russell throughout this show. Wednesday, well, this was really the third day where we saw similar action. Energies lifted the market early as oil moved up on that Suez Canal blockage, that giant ship that is just right across the Suez. But the market reversed to the downside again. S&P 500 fell 53 points off of its high, again in late selling. So we've seen some changes in the market when we look at this environment. And more cracks really started showing in the speculative fervor as the IPO situation has really weakened. DigitalOcean, their IPO traded instantly down about 12% from the offering price. And then Vizio got priced at the low end and then sold off also on the next day on Thursday. So we're seeing some weakness in the IPO market. Thursday, well, new claims were better, and there were big swings in the market. Oil moved to the downside again now, as the thought was that the blockage would be temporary in the Suez Canal, falling as much as 5%. And the stock market had an early drop. Bitcoin got hammered as central banks are looking at that hard. The SEC is looking now at SPACs. So there's a lot of these things that are speculative that are really starting to show signs of weakness. Fed Clarida was out and said that they will be in the game. They're going to stay in the game until the recovery is well and truly complete. And this is just another one of those statements that says that they're not going anywhere because they have created a dependency. In other words, they've taken over the markets. The market can't survive on its own. The economy can't survive without the government pouring in trillions and the Fed printing trillions, now almost up to $8 trillion on their balance sheet. So there's a massive dependency, and this is really a dark cloud cover, and that's why CAPEX is not growing, and companies don't know when they could spend any money on growing their company. So again, when the tone changes a little bit and the economy recovers, we're going to see that a lot of stock buybacks coming back, and of course the government now is going to allow it for the banks again. So we get into the same trick bag, and this dependency on the Fed and the government is incredibly crippling and a horrible thing. S&P 500 on that day, as I get back to the markets, they were up strongly after being down. They moved 50 points off of their lows, and then headed down again on another poor auction on Thursday. The 7-year, which is 2 months in a row of that being weak. But there was a strong close on Thursday in the market as recovery stocks led on the upside, and they closed very much near their highs, with S&Ps gaining around 20 points, and again, what was quite a choppy day. Friday, yields began to move up again, and that started out with the techs getting hurt, but that all kind of firmed here on Friday pretty quickly as buyers came into the market. All of this talk about infrastructure spending has got the bond market selling off again. $3-4 trillion is now what President Biden is talking about spending. So you add all of that to this recovery spending, this now being infrastructure spending, and that leads to a huge demand in the debt markets. That's part of why the 7-year auction was so weak for another month. Because there's huge competition now. How can they sell all of these bonds? It's the government's going to have to monetize a ton of them. So where's the government going to get the money from? Well, they're going to raise taxes. And investors know that that's coming in a pretty significant way. And they're going to increase the debt bomb, of course, maybe to nuclear size right now, as the government will have to borrow money. And, there's that old adage about the private sector being crowded out. Interest rates are going to have to go up along the way here in order to support all of that borrowing, in order for the investors to actually be interested. So don't be surprised if even these little downside wobbles in interest rates don't hold up and they continue to move up well past 2% on the 10-year. So on Friday, stocks, they were kind of mixed early, and then they firmed, and here we are at midday on Friday, and the market is kind of holding some gains. It's getting helped again by those recovery stocks. Materials are just surging today on the upside. U.S. Steel, one of the big leaders, up over 8%. Nucor up 7%. So the steels and the materials getting bought very, very heavily. FCX up about 5%, same thing for Cliffs. So that's what's leading the market up today. The recovery stocks, energy stocks getting a boost as, again, oil bounces up some 4% on talk that tanker that's crossing the Suez Canal may not be moved for weeks. So that has got the energy sector moving up a little bit more today. So stocks, well, let's just talk about that for a second. They're starting to show signs of struggling, in my opinion. And I say that because I really see a tone change. And that is in the speculative area. Speculators seem to be weakened. And when you start to see that late selling in stocks, that is a reason for concern. They don't want to hold on to these things anymore, and that is showing some weakness in the market. Bitcoin, that's also showing weakness, and that's a sign that the speculators are backing off right now, and they won't be lifting the market anymore. This is a big option expiration for Bitcoin, so there was some fear that it was going to get sold during this period, but it's getting a little rebound today. And as I said, IPOs are really weak when you look at those that are coming out, with the SEC taking aim at the SPACs and interest rates picking up and the debt exploding. All of that is putting a lot of nervousness into the market. Coming up, we're going to look at the S&P 500 again at the end of the show, the SPY. And I'm going to look at, the chance that our rally that we think is going to go into May, June, based on the patterns we look at, it may only make the low end of our targets. And I'll show you what those targets are. Another thing that we're going to look at is the Russell, because I want to show you what is a very weak and topping pattern in the Russell, which may also be a big sign. So you can get the tone of what I'm bringing you today, is that while the speculative areas have been leading the market in a very significant way, and we have seen some rotation into recovery in value stocks, at the same time, those things that are leaders just may not be able to do it anymore. So we're going to take a look at that. Also sharing our level 4 member last 10 special requests. You're going to get an idea what that long sentence means as I'm going to show 10 sets of chart analysis to you that our advanced trader section that level 4 where they make requests, and you're going to find that extremely interesting. And I'm going to show you the silver analysis, which I think is showing silver has got trouble out there. And I've been positive on silver. I've had a trade on in silver, and now I'm getting cautious about it. And I'm going to show you why. Right now, midday stock market, it's the S&P 500, the Dow Jones, just fractionally up on the week. The NASDAQ is around unchanged. The Russell, like I've been telling you, getting hit, down about 3.5% on the week, and definitely the worst index. And this was a market leader, and now it's not, unless it is a market leader to the downside. Bond market, the 30-year gains almost 2 points. The 10-year yields fall by 8 basis points to about 1.65. The gold market really struggling to hold a rebound, down about $10, $11 in the week right now. Silver market down about 70 cents and really bad. I'm going to take a look at that coming up. We have the dollar moving up this week, and pretty significantly, 1.2%. It's helped by a weaker euro, and the Eurozone struggling from more COVID lockdowns, and a weaker yen. And I'm also surprised that the yen is weaker right now, with the Bank of Japan coming out and saying they were going to allow a wider range in interest rates. That you would think would get the yen to firm, but that did not happen. As anything, it really moved to the downside here on Friday. Oil down about 40 cents only right now in a pretty volatile week that we have seen. And we're going to look for some further corrections in there to the downside. That Suez blockade that we have right now, well, not really a blockade, but it's blocked. It really should do better for oil, as nothing can pass through there right now. And at the same time, oil has not done that well this week. So that's really a bit of a concern where oil could do better and it doesn't. It just shows you that there's some relative weakness in there in the oil market. So that's everything I'm going to tell you about in this opening section of a market week. I want to remind you to please go to our website and explore that, and make sure if you're watching this on the YouTube channel, click that notification bell. Do subscribe to our channel and let it tell you when we put up one of our many videos that we put up every single week. You make sure you give us a thumbs up if you like this video. Follow us on Twitter at askSlim. If you have any questions about memberships and some things I'm going to show you coming up, then make sure you write to Matt at askSlim.com, and he'll be able to help you with anything you want to know. Also, I want to remind you that for our level 1, this is really entry level. To get a good sense for what we do here at askSlim, we have this just absolutely amazing special. It's only $14.95 a month, and if you subscribe for 3 months, it's $30. So it's only $10 a month. You're going to get our Slimulator Momentum Tracker, which is an unbelievable app. It's going to give you all of our algorithms looking at over 1,000 different symbols you can put in there, 20-something canned groups. You're going to learn everything about the momentum conditions and our output. It tells you for the next 3 to 6 month outlook. This is for position traders and investors. Our stock index report, that's weekly. You're going to get technical analysis on the indexes. Our Spider ETF review, which comes out weekly. You're going to get our new trader investor workbench, just amazing area to organize, prioritize, save, track all of your own analysis right on there. You're going to get the archive for this show, and you'll be able to go back and look at all of our analysis, and you're going to get our askSlim live replays. These are 70 minutes of just packed with the stuff that we teach and analysis that we do in front of a live audience, and you'll be invited to that sometimes too, and some special member videos. All of that just $14.95 for a month, and if you want to take it for a quarter, $30. Unbelievable what you're going to get here. It's a great way for you to get a taste of what we do and get a good sense for what you'll also be able to look at in other levels of our membership. So do become a level 1 member if you are not an askSlim member now, and you'll get some good sense of who askSlim is and what this whole team does. Amazing stuff. All right, so now we're going to look at some just very, very different analysis right now that I think you're going to find extremely interesting. So I'm going to put up our website right over here so you can get a sense for where I'm going to go to find this. So this is our front page of our website right over here. Now I'm going to go to the dashboard, and this is going to bring up our level 4 dashboard because I'm set up for the level 4 membership. So you see level 4 dashboard and everything that is included on here. I'm going to go down to look for level 4 chart requests, and you can see that right over here. What I want to do is share with you something that's just amazing. Now, this is the first time I've ever shared this in public. And what we offer is for our level 4 members to make requests. They can ask for 2 requests a week of special analysis where we do custom chart work per their request. And then we share that with our level 3 members also. So level 4 members get the chart to open up on their Thinkorswim platform. Level 3 members, for those people that are not Thinkorswim users, then they get this in static form. And you can see in here that all of the different requests that members have made, and I'm going to show you the last 10 in just about 5 minutes in here. This is from the last 3 days, Tuesday through Thursday, and what you're going to see is weekly analysis, daily analysis, looking at cycle analysis, momentum conditions, our phenomenal Libre PO for momentum signals. And we're going to run through this really quickly, and I'm going to help you understand what this is. So again, these are the last 10 requests from our level 4 members, of which level 4 members get live on their Thinkorswim platform. Level 3 members can see these charts right over here, which are static. So here is that DBC, which is the commodity tracking fund right there, and you can see our analysis. And I'll just help you understand this a little bit. This is the weekly analysis right over here. This is the daily analysis, and what you're looking at are the cyclical patterns, and these are cycle brackets on the bottom. And when you see 2 of these right over here, that's the timing for the next low. You can see the low right here and the low right here and the low right here, as the period of cyclicality is pretty similar when you look at that. It shows a declining pattern right over here, which is likely to take you down to about 15.5 or lower, maybe 15 over coming weeks. You can see right over here there was a breakdown right there. The momentum had been positive right over here, and it's still positive right over here on the weekly. So it's just turning neutral. You can see all of these signals on the slim ribbon PO, bullish, 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 bullish. All of this says that it's continue going up, and now it's broken under a key level and the momentum turned neutral. There is a topping going on right over here with that breakdown, and we're expecting lower prices in DBC over the coming weeks as the commodity market, which had a very, very good rally, now looks like, well, that's probably over for a while. Let's take a look at VUZI, V-U-Z-I, right over here. And you can see in here there is no cycle analysis on the left because there's not enough data there. And on the right, it is showing you that on the daily chart, it has a minor pullback still due, but these are all positive cycles, and likely that this is a buy zone over here and will be moving up again to test those highs. Momentum positive right over here, momentum positive right over here, and all of these signals that showed you it was positive. So that's the second one that I want to share with you that our members, level 4 members, have requested. Now let's go down over here and we'll look at Porsche right there. This is an ADR, and you can see the cyclical patterns on the left on the weekly and on the right. This has a pretty good size reversal right over here. Momentum still strong, as you see right here. This is a key level right there, and we're projecting it to get down in the next couple of weeks, down to this area of that 78.6%, and then likely moving up again. So that's the analysis that you see here on Porsche. The next one we'll look at is the level 4 chart request for Quantumscape. That's QS. Some of these are stocks that we don't normally look at, so we have to do the custom work. You can see in here that this was an IPO not too long ago. It had a giant reversal, and now momentum is turning up on it right there. Here you could see the actually very nice cyclicality in here, momentum getting better. And this actually looks like it could be coming into a buy zone right over here. So it pulls down to about maybe 45 bucks in the next week and then likely moving up again. I like it when momentum is improving. And you can see in here, that's what you're seeing here as you look at this analysis from this week on QS. The next one we'll look at here is, take a look here at Tencent. So Tencent is an ADR also. We do a lot of work on these ADRs that people ask for because they're from other countries, and some people do follow us from other countries, that's for sure. This one you can see in here actually is showing you that it lost its momentum and turned down right over here. That brought you into this correction right over here. 34-week moving average is the magnet that always comes to, as you can see. Now, you see this low due right over here in about 3 or 4 days, it says? Well, that says that this rally right over here is likely to fail. So we'll be looking for a sell zone right over here as we look at this stock, looking like this downside will continue here out into June. So when it makes the bottom and then moves up, you'll see it's got trouble. Look at all of these sell signals right over here. In other words, these are warnings of negative momentum and how it brought all of this selling. The Slim Ribbon PO, along with the Slim Ribbon, are two of the best momentum indicators you will ever see. So let's look at TCEHY. Now let's move to the next one in here. We're going to look at MELI. This stock, as you can see, is another stock that is really a foreign stock. And you can see that it gets down and makes a low right over here and then started to bounce right there. So what we're looking for is it to kind of trade around in here because momentum is negative there and the momentum is negative here. You got another negative signal right there. And it's got to hold up right over here. If it doesn't hold up here, it could have a lot of risk. We're assuming that it will. It'll come down and test this area and then get another move up and get up over here to that area near, that is 1600 right over there. So if it holds nicely in this area, it is likely to give a shot back up to 1600 there. Of course, none of these are written in stone. Everything is our analysis when we look at these things, and that is a good look at MELI. Here is MARA, Marathon Digital Holdings, and no cycle analysis, as you can see on the weekly on the left. A good upside momentum, as you see right over there, and right over here you could see it's about to make a low in support. This really looks like it's in a buy zone right over there, so that is a look at MARA, which looks like it has another shot to the upside when we look at that. The next one here is MSCI. And this is MSCI, and this has got a kind of a bullish pennant going on, or flag right over here that you could see. Though momentum has weakened, that is an issue. Momentum is having a hard time getting positive over here. It's been neutral and negative. So what we're looking for is another attempted rally up over here. But these downside gaps that you can see, those are really giving us a sense, since it got down here to the 78.6, that the next rally will fail again. So it's kind of range bound that we're looking at in here, somewhere between 400 and this area here of maybe 430, 435, without being able to make a lot of upward progress. So that's MSCI, really moving through these quickly in here. We just have two more we're going to look at. First one is FDS. This is number 9 of the 10 I'm showing you that our level 4 members have requested. This is a negative pattern right over here, and this is a sell zone in my opinion. Why is that? Well, you see the negative cycle right in here. Generally, the odds are when you get a failure here in the second week on this cycle pattern, and you go negative, as you see, which really was something we saw. You see the negative cycle right in here. Then the next cycle fails again in the resistance areas, and we can see that right over there. So the next short-term low coming up is due over here in April. We'd expect some pullback, chop area, and then maybe a modest decline to a bigger decline out into this period in May. I don't like these kind of patterns when they set up this way. So FDS not looking great. And the last one we'll look at is Altria, MO. This is one of the more widely held stocks. And this is a stock that has been looking fantastic. You see in here, this is what we call a cyclical base, where it made this positive cycle pattern here in this cycle. Then when it gets above this level right over there, it breaks out and explodes, moves through all the resistances till it hit that cycle resistance right over there. Here's some fib extensions. We would expect it to start to get a little sloppy in here and then pull back, but then this would be the buy time frame over here in late April, early May for another move up. We're projecting up to that 53.40 area right there. So given a chance to buy it back down over here, I think it will do actually quite well. So that is a look at 10 of the special requests that we have had here, level 4 special requests for our members. You can see in here that they also get our trade ideas and just a lot of great, amazing things. So this is the level 4 dashboard that you're looking at here, which this also has our workshops down on the bottom here. All you have to do is become a level 4 member, and you have access to every single thing that you see on here, including our 600 video library. I just want to show you one more thing, because I talked about to be a level 4 member, you really need to have Thinkorswim. If you want to consider opening up a TOS account, they are a preferred broker, and our charts run on those. So I'm just going to take you right over here, and if you just scroll over to the right on the front page, you can click on here and open an account at Thinkorswim, and of course we get credit for that. So this is you can just continue to scroll in here, and you can see our proprietary indicators, things about our workshops, tons of information. So just go to askSlim to the web page, and you'll be able to see about our memberships and learn about a lot of things that we put out. And don't forget, if you've never been here, just become a level 1 member, and you'll start to get an idea of the things that we do. So that is a look at the special level 4 requests. That's the last 10 of them that we've put up there, and that's just on March 23rd through 25th. So you can see it's pretty active with our level 4 members that make a lot of requests for this custom chart work. And again, we don't give one-on-one advice. We just share the analysis for education, and then the members then do use that for their own purposes based on their own trading style. So that is a look at, I think, that really exciting stuff. All right, so now we're going to look at silver. Silver, you can see what I say here, a worrisome analysis. I have been positive in silver, and I have seen it overperforming gold. And now there's something in there that's changed, and there has been some weakness that has come in, and it definitely, I would say, is worrisome. At least I'm worried. Of course, because I'm a silver holder, and I have been positive on it, and now this is not looking good. So we're going to switch over here. I'm going to go to /SI, and I'm going to show you the analysis that I'm looking at. I'm going to look at the weekly and the daily. So let's look at the last 2 large harmonic families. For those of you that are brand new to looking at this, these are cycle brackets on the bottom. The gold ones that you see here are gold, and we leave that on there because there's often movement that occurs because of the high correlation between gold and silver, so we want to see how they both act together. Here you can see there was a nesting of some lows from silver here also, and the gold really a little bit off from that. So this, you can see a half cycle right over here and where it bottomed, and a half cycle here, and the clear nesting of everything at that point brought that decline. The yellow zones are where the biggest downside risk is, where there are a lot of cycles that push to the downside. You can see that comes up in silver later on in the June-July period. Right now, it's important to see something, and I'm going to show you the weekly and the daily. So it rallied as it should. We were looking for it to get above this level, and it did. This big upward spike there was the Redditors, that all the discussion was that they were going to create a short squeeze in there, and it happened just for a day. And then I think they realized they couldn't squeeze this one, and that was the end of that. You can see in here that there is a head and shoulders top that's forming. The question is, did it break down yet? It looks like it on the daily chart, and I'll show you that. But now the question is, will it break down now, or will it break down after having another move up kind of into this area? And this would be around high 26s to the mid 27s. In there, and then if it failed in that resistance, then you'd have the completed head and shoulders. If it got down below here, 2450 is a really bad spot for it. If it gets below that, it's all over. And you could see all of this risk in here and pointing down for this decline in June and July. If that completes that head and shoulders top, and what will be clearly a double top right over there, you will likely get a decline to the measured move, and that takes you under $20. So that's why I'm concerned when I look at this. Any chart that has this kind of pattern could save itself. It would have to move up, get above this level right over here, above, let's say, 27, and then be able to get through these resistances to save itself, and then ultimately need to get over the 28.5 area for me to say, well, this rescued itself. Right now, this is a dangerous pattern, and to me, looks more like $20 than it does $28, that I'll tell you. So this is a weekly pattern that says it might fool around in here. It might be able to get saved. It might get into the 27s, but over here is where there's a lot of risk in this June-July period for silver. I'll switch over to the daily. These have what are known as complex cycle structures, and when they're trading in the bottom part of the cycle here under negative momentum conditions, as you see here, and you start getting these sell signals for the momentum conditions, that is really dangerous when you see that. And here's that left shoulder and the head, and this right shoulder forming or formed. It got just barely under it and bounced back up, so we don't know whether it broke down, but you're getting into the next week and a half of a lot of risk, and it could fall apart in here. I hope it doesn't, because I still have positions on in here, but at the same time, I'm just wary of what I see in here. So this gold is coming down into the same time frame that this is coming down. So not only is there a lot of risk in June and July that we talked about, but the very near term, this next week, week and a half, is some risk also. I think if it got into this area of just over 25.30 to 25.60, it's really a sell if it gets into that area for short term, because it's likely to fail from there and move down again. Negative momentum that you see right over here in silver, that screaming head and shoulders that you see right there that is made up of 3 dominant cycle patterns. Cycles make head and shoulders and make other patterns. And if you take my cycle analysis workshop, I will teach you all about that. I want you to see one more thing in here, because I'm talking about this negative momentum and the signals that are negative right here. This is where silver turned negative on the weekly chart, and you see that downward turn, and this is a really poor performance that we're seeing in there. So silver, I'm going to say it's risky. At any time you could get some crazy news that causes it to rally, or these short squeezers come back, but that's a low probability based on what I see here. And when I think about that, I know that's part of me that has hope talking, and I don't want to do that. You know, basically this is an analysis that looks at silver being quite weak when I look at that. And you can see the consistency in these cyclical structures that you see here, and everything that we learn in there. Remember, you want to learn about cycle analysis, go to askSlim.com and go to that workshop tab, and we have some videos there and things that will help you understand what we're doing there. So that is a look at silver, and what I think is a overall not so great pattern, and maybe quite risky. All right, so now we're going to switch over here, and we're going to look at the stock market. 1 to 3 month analysis, and I'm going to also show you the RUT, the RUT, the Russell 2000, because there is a warning there. And that warning is telling me that I have to start thinking about the fact that while I believe the stock market is positive, and is likely to see the S&P 500 over 4,000 between sometime May, June, that there's a reason for concern based on what other things I'm seeing in the market. If you didn't watch the early part of the show, then go back and watch it. I mean, I talk in there about these speculative things that have driven the market that are now weakening. And when you get that and you get the Russell that is agreeing with that, you got to start to wonder if markets can hold. And when you start to get sell-offs that come in the final hour or two of the day, then you know something has changed pretty significantly. I'm going to move here from silver and I'm going to go to SPY. So here is the SPY chart. All of those yellow zones are corrective areas. We had looked for a decline of 6-7% right over here. It was 5.8%. And then got into the next rising phase. So I want you to look at rising phases in here. You can see where there's a nesting and you get the rally. So this rally in here was about a couple of months right over here. This rally was 3.5 months that you see there. This rally was about 6 months that you see there. This rally about 5 months, right? So these rising phases have been basically strong when you look at that. So we're now into the next rising phase. In fact, we're 3 weeks into it right now, 3.5 weeks, as the market has begun to move up. And momentum in here has maintained positive. So while I'm looking for upside, and I've talked about the likelihood of, well, 401 should be just a given in here. And then this area right here is about 406, and this is 411. And then the other areas up there are 423 to about 431. I got to tell you that these areas up here, 423, which is the higher track that we have in there, I think it is a very low probability now based on everything else I'm seeing. So again, we're looking for this period of April, May being positive, maybe even making it into June, and then a ton of risk coming into the market over here. And ultimately the highs for the year being made, we think, right in there. So now I'm skeptical based on what I've told you about the speculative fervor being diminished by quite a bit, and the likelihood that the leadership, the financials are starting to soften again right now, as the bond market yields are starting to move down again a little bit. The what we see in the pressure on the government looking at SPACs right now, and also the central banks looking at Bitcoin and other cryptocurrencies. There are a lot of these things that are problems. And when you look at a couple of the IPOs that came out recently this week, they were very weak. Usually you see them explode to the upside, 30%, 50%, 100%. Well, the last two, DigitalOcean and Vizio, went down. So there's a lot of reason to believe that the speculation is coming out of the market, or it's just tired. It's just done after all of these months of it. And that's why I am lowering my projection right over here to only getting into this about 401 area, and then really starting to struggle. So I'm not looking for a lot of upside anymore. And I'm going to show you another reason right now. And I'm going to go into the Russell. So I want to switch over here to RUT. And that's right here. And we're just going to move this over to the daily chart right at this point. So you see here the beautiful structures that we have in here. Now I want you to note that I need to go back just a little bit more right over here and get you these last three positive structures right there. So what I want you to note is that each of these beautiful structures is made up of two halves. There's a half right over here, and then the second half. And you can see the clarity in that cycle pattern right there. And I want you to see momentum strong through all of this period. That arrow right over there, and all of these beautiful signals in here that says expect higher prices, momentum strong, just absolutely super. Just absolutely great. You can see this big cycle. The bottom of it ended way above where it started, and here the bottom ended way above where it started. So here is that nested area right over there where that cycle pattern came in. This is all the longer holders and intermediate holders and short-term holders when you look at that. And the dominant one is this big upward move, and the real dominant upward force you could see in the momentum here. All that great. Something has changed. The first cycle right in here almost broke that low. You don't have anything like that here or here. There is a lot of weakness that's starting to come in here, and I want you to note momentum right there has turned negative. So for the first time in all of these months that we're looking at, right now we're looking at about 4 or 5 months, we have the momentum conditions changing. And the Russell looking like it has got problems. So there's a little low due right over here. You might have made it. Maybe it dips one more time. But then the next rally should really fail in this area. Let's just say somewhere here between, well, it's already gotten above there. So this level here is 22.37. This one right over here is at about 22.67. So somewhere in this area, in this next rally right over here, it is likely to fail and give you some larger declines right over here. Breaking that support at 20.85 will be a very bad thing. Right now, it just almost did it. Markets survive after doing that. You can see it comes down here to the 89-day moving average right there, and then gets a bit of a bounce there from that same low that it made right there. So it got the bounce here. It makes sense, but what we're seeing in this loss of momentum is not good. Overall, I think that this picture that I have painted here is that speculation is coming out of the market. Now, recovery stocks, as we see today, are leading the market as you have very significant gains in stocks that are like steels and material stocks, and some bounces here in the energy stocks, and that's what's leading the market up today. So there's all of this rotational stuff that's going on, but banks are weaker, financials are much are weaker, the tech stocks are much weaker, and those things that tend to be good, consistent leadership for the market are not doing it now. And at the same time, you have the condition where the speculative areas of the market really look like they're done. All of that says that I think that the upside is limited. Again, time-wise, we're looking for May, June. We're not bearish now. The stuff still looks okay, but these warnings are there, and maybe it makes sense to start considering that the upside will not be all that dynamic during this period of these next couple of months that we're looking at here. That is a look at the stock market and a look at everything I'm going to show you today. I hope you have found it extremely informative. Do make sure you go to askSlim.com, explore that site. If you're new, become a free member, or make sure that you sign up for level 1 at that amazing deal that we have there. Subscribe to this channel, click that bell, give us a thumbs up, watch the members videos that we have in the playlists here on YouTube. And go to Twitter and follow us at askSlim. Questions on any of our memberships, anything that you might have about any of the offerings that we have, trials, educations, all of those things, please do write to Matt at askSlim.com. That's it for today. I want you to be so unbelievably careful. It is so crazy out there. And we're always wishing you great trading.